Bit of a data blitz in the last 18 hours. We're going to check out what's happening with Jim Wyckoff on Technically Speaking. Jim, thanks for joining me today.
Hi, Alex. Always nice to be with you.
So, Jim, we saw jobless claims come out this morning, push gold to over $1,300. Then flash PMI, existing home sales, came out a little later, bringing it back down just below $1,300. So, what I want to ask you is, how sensitive is gold to headlines right now?
Well, Alex, I think the major data point so far Thursday was the Chinese manufacturing data that came in stronger than expected overnight, and that gave gold its initial boost. We did see jobless claims favor the bullish camp in gold. So we are looking at the headlines, and I think the next big development for the gold market is probably going to be the Ukrainian presidential elections this coming weekend, which could cause an escalation in tensions in the Ukraine with Russia and its territorialism.
Now, lots of dialogue out there regarding the Ukraine supporting gold prices right now. Big election coming out on Sunday, also long weekend, Memorial Day weekend for the U.S. Now, how do you see gold positioning for the long weekend?
Well, Alex, going into a long U.S. holiday weekend, I sure would not want to be short gold. And I think you will see on Thursday and Friday at least some short covering, maybe some bargain hunting, some safe haven demand ahead of the uncertain weekend.
And of course, we have to touch on the Fed minutes yesterday that saw gold pull back a little bit initially. Now, what's your take on the Fed minutes that came out?
Well, Alex, the initial reaction, the gold market was bearish because the Fed, in its minutes, FOMC minutes, mentioned the process of raising interest rates down the road, and I think that spooked the marketplace a little bit. But upon reflection, when all is said and done, the marketplace realized that a U.S. interest rate hike is still a long ways away, and that prompted the gold market to recoup some of those early losses.
All right, Jim, let's take a look at your Wyckoff market ratings for gold and silver.
Okay, Alex, so I'm giving gold a Wyckoff market rating of 5. That's in the neutral camp. We are in a sideways and choppy trading range on the daily bar chart, with neither the bulls nor the bears having much of an advantage. We've got solid resistance for gold at the recent high of 13.15, solid support at 12.77. Looking at the silver market, I'm giving it a Wyckoff market rating of 3.5. That's in the bearish camp. However, recent sideways and choppy trading at lower price levels in the silver market could be some basing activity that will put in a market low. So I'm giving silver a rating of 3.5. We've got overhead resistance at $20. We've got solid technical support at 19.
Excellent, Jim. Thanks for coming on today. Enjoy the long weekend.
And wait till next time, Alex. Bye-bye.
And thank you for watching this edition of Technically Speaking with Jim Wyckoff. If you have any comments or questions, don't hesitate to send them to newsfeedback@kitco.com. Have a good one.